Good morning, students. Welcome back. So today we plan to start with a new topic, and I'd say very important topic, in fact, for that's all about reporting requirements. It's in terms of audit of the financial statement. So there are a lot of aspects we have covered, and we have talked about as to how important they are in a similar manner. So today's topic, which is about the reporting requirements, becomes very important on the part of the auditor. So let's just quickly flip through some of those requirements that we have in terms of this. Okay, so this is chapter 7. Okay, so if you are referring to this, you may refer chapter 7. Now, audit report. Now, as regards the audit report, we can say there are various auditing standards which deals with the requirements of audit report. Okay. Now, as regards the audit report, we can say that this happens to be the only deliverable which will go from the auditor to the company. Now, during the course of audit, okay, so there are a lot of information that the auditor will receive from the company. Inquiries he'll do, okay, data he'll obtain. We also discussed that various types of audit evidences he'll obtain. And audit is more of like a service, correct? So you can say that in respect of the information that he receives, he will be providing the audit services. Yeah, because that's a kind of service only, correct? But eventually it all comes down to the audit report, because the time which the management would have spent, okay, the company would have waited. So all of that is in respect of what? Audit report. So that's the thing which the company has been waiting for, or you can say that's the thing which is the ultimate outcome of this entire process. So that's why we can say that this is the deliverable which the auditor provides to the company in respect of various services or in respect of various procedures that he'll follow. Okay. And in this audit report, it's all about the audit opinion. Okay. Some of the objectives, some of the considerations that we have discussed, okay, which the auditor is required to look into. All of that comes down to the audit report, because that's what the auditor was working for. So no, yeah. So now, as regards the audit report, as we have discussed, that there are various auditing standards which deal with the requirement of audit. So what are those? We'll also try to flip through some of the audit reports today. Okay. So if you just go through the actual audit report, you'll also get a feeler as to how the audit report really looks like. What are the various ingredients you'll have in the audit report? Yeah, so that's something we can just plan to do today. Now, as regards the auditing standards, we can say that we have this auditing standard 700. Okay. Now, this standard is all about the format. Now, as regards the audit report, please understand that audit report has a prescribed format, similar to what you see in case of financial statements. And so in case of financial statements, what you have? There's a prescribed format, okay, which the company is required to follow. Yes or no? So in a similar manner, audit report has also got a prescribed format. Where does it come from? Auditing standards. Auditing standards also prescribe what are going to be the contents. What is going to be the order in which the audit report is required to be laid out. And where do you have that? All of these things are available under SA 700. Then one of the elements of the audit report happens to be CAM. Okay, CAM is a popular term that you use for key audit matters. In fact, on the key audit matters, we have had some discussions. So we have briefly touched upon this aspect in some of our previous discussions as well. So this is again a specific requirement with respect of the listed companies that we have today, which are required to report this in their audit report. Not really applicable to each and every company, to the specified categories that we have. And for this requirement, there is a separate auditing standard, SA 700. Now, I think there was a lot of discussion around the modifications in the previous session. Yeah. Modifications means the qualifications, adverse opinion, particularly when we are discussing this going concern. So now, in the audit report, the auditor may express clean opinion. Clean means when the modification is not there. So he finds that the financial statements are giving a true and fair. That's what you call as clean opinion. Okay. As compared to that, sometimes there could be some misstatements which are material. Correct? If those misstatements are material, so what will happen? What will happen? There will be modifications. Now those modifications could be in the nature of qualification, adverse opinion, disclaimer of opinion. So all of these things, if one has to look at, where does it go? So there is a separate auditing standard which provides guidance on it. When do you modify? Okay, and if you plan to modify, so what is going to be the modification? All of those aspects are covered by SA 705. Right? Then there are certain situations when the auditor doesn't want to modify because the misstatement is not. But he believes there is some important matter which should be brought to the knowledge of the users of the financial statements. Yeah, so it's like he wants to highlight those matters. So there's no problem as such as far as the financial statements are concerned. So that's why what will he do? He will highlight those in the form of emphasis of matter. Or you can say other matter paragraph. Now again, for this aspect, we have a separate guidance available under SA 706. Okay. So we can say that these are the auditing standards which become relevant for the purposes of understanding of various aspects related to audit report. Okay. So now what we will do is, now we will flip through one audit report, okay, actual audit report. And once we flip through that actual audit report, I think we will also get some perspective of some of the elements which are there. I'm sure you would have gone through some of the audit reports in the past as well. But if by chance you have not gone through that, this will only help you in terms of getting more clarity as around the reporting requirements. So now, before we get on to that, now when it comes to the audit report, as we discussed, there's a prescribed format, there are certain elements, and there's a particular order in which all of those elements are required to be included in the audit. So what is that? That is available in front of you. Okay, so if you look at the screen, this is what you have. Okay, all of these are the elements, and this is the specific order in which all the contents, all the elements in the audit report are required to be sort of brought out. Okay. We have title, addressee, auditor's opinion, basis for, of course, ongoing concern, as we discussed, MUGC that we had, material uncertainty related concern, wherever that will apply. Now, in this case, please understand that some of these elements may not apply. Yeah, so it's not necessary that this going concern you will see in every audit report. CAM you will see in every audit. Emphasis of matter you will see in every audit. Why? Because they will have to be looked at as to whether they apply to that particular. But the other elements which you can see, they are the ones you'll always find. Okay. Yeah. So now I think now what we can do is we can just move on to the actual audit. Correct? Okay. All right. And we'll also touch upon, I think, the requirements of some of the auditing standards like CAM, modifications, EOM separately. So let me do one thing. Let me just open one document. Just give me a minute. So what I've done is, let me just share this with you. Okay, so we've got this audit report. See, the idea is to just flip through that because you all understand about most of these requirements. So to begin with, what do you have? You'll have the title. So what is going to be the title? Independent Auditors Report. Now, as regards the auditor, I think in the objectives at various places we have discussed that auditor is required to be independent. So no. So this is again highlighted in the title that this is the audit report of the auditor. Then you'll have the addressee. So whom do you address this? That will again depend on the requirements of the audit. Okay, so who do you address this to? So this is addressed to the members of the company, right? Then you have this, you can say, sort of subtitle. Now, this report that you have is on the audit of standalone financial statements, right? Report on the audit of standalone financial statements. Okay. Then you start with the audit report, and I think you start straight away with the opinion. See, this is what the stakeholders, you can say everybody is waiting for. What is that? Opinion. Yes or no? Yeah. So this is what they have been waiting for. This is what they are looking at. So they are looking at the opinion. Means what is the opinion after this audit which has been completed, which may have taken at times months. So what is the outcome? So in this case, auditor will specify first of all as to what did he do. So he says we have audited the standalone financial statements of the company which comprise the balance sheet. Now in this case, please understand that whenever the auditor will be communicating, okay, so this is a sort of communication. So auditor is always very clear and specific. And he will not try to generalize the things. At the same time, he will not try to assume anywhere. Let me just help you understand this point. See, he is writing, we have audited the financial statements. Okay. Now we all understand what do the financial statements include, yes or no? They include balance sheet, statement of profit loss, cash flow statement. All of these are the components, but even then, he is specifying this. He says we have audited the financial statements of the company which comprise the balance sheet as at the 31st of March and profit and loss, statement of changes in equity, cash flow statement, notes to accounts, material accounting policies. Can you see this? Yeah. So he's not generalizing or he is not assuming that, okay, this is understood. He's just trying to specifying each and everything. So he's very specific. Then in the second para, he is giving his opinion. Yeah. So what does he say? He says that the financial statements give a true and fair. Now here again, when he's saying they are giving a true and fair view, so he's specifying for each and every component. He's saying true and fair view in conformity with the accounting principles, etc. of the state of affairs. Means balance sheet. Profit means statement of profit loss. Changes in equity. Cash flows. Okay. So here again, please understand that he is just trying to specifying about every component which is there. Then, once the opinion is given, he will also specify the basis. Means what has led to this outcome. So how did he reach this? Yeah. So the basis for that. Now in this case, he is specifying that we conducted our audit in accordance with auditing standards. We are independent of the company. Okay. He is also saying that we had some responsibilities, but those are described separately in this audit report section later. Over here, he is not explaining all those responsibilities. He is giving a reference of those responsibilities in the audit report itself, which is covered later. Okay. Then he is talking about his independence, ethical requirements, all of these things. Now, after explaining all of these aspects, he says, we believe that the audit evidence we have obtained is sufficient and approved. Can you see this? Sufficient and approved. So here again, he is clarifying that why did he reach this, conclusion. So he's saying we have obtained sufficient evidence, appropriate evidence, which was required to be obtained. Okay. Then of course, in the next section or in the next part, you will have a UGC, emphasis of matter. Now, in the given case, it's not applicable to the law. So that's why you don't see it here, right? Now, for a company to which it will apply, then you will have that particular para also. Then comes CAM. Now let's try to understand about CAM. So anyone who can just explain what is CAM? Any thoughts that you have? What is CAM? What are the reporting requirements in respect of CAM? Over to you. Anyone? Quickly.
Sir, CAM are the matters which are essential to the knowledge of the stakeholders, which is to be reported by the auditor.
Okay, so like you mentioned that these are the matters which are important for the stakeholders. But there's another thing which you include in the audit report, though we have not discussed that, but I'm sure you know this. Emphasis of matter. So do you have any understanding about emphasis of matter? Tell me.
Sir, emphasis is specific, but in the CAM paragraph, auditor has to report on the certain things which has been given into the standard.
Okay, so that means you understand. Very good. So can you differentiate between these two?
Sir, actually, the emphasis of matter is relating to the financial statement, the presented in the financial statement, and the disclosure is provided in the notes to the accounts is appropriately given. When the auditor feels that to highlight those information to the user, the reader of that financial statement, it is useful. See, if the auditor is decided for those items, and he will pick those items based on the presentation available in the financial statement and the disclosure, he will highlight those items as a emphasis matter paragraph.
Okay.
Whereas the key matter, the CAM, the key auditor matter is the matter when he is performing the audit, he feels that is the utmost insignificant, and also based on his auditor judgment and experience, if those matters, if we are giving in the financial report as a auditor report in the CAM, that will be useful for the reader's understanding. If he decided, say example, in this case, it is not a substitute for the emphasis matter paragraph or modified opinion. All these things is here only the significant matter that the CAM has to be discussed with the judge charged with the governance. Then only he can able to report, because it is a additional information what auditor is feels in addition to the modified opinion and under the emphasis matter and other paragraph. He feels that while the audit performance, say example, if it is a gratuity calculation, the gratuity, some law is there. See, he wanted to highlight. See, these are the instances happen. These are the want to bring into the notice of the shareholders for the understanding.
Okay. All right. So I think because we have touched upon this CAM as well as emphasis, so let us first of all get into the discussions related to CAM. And then alongside, what I'll do is I'll also touch upon the emphasis. Okay. Now, what is CAM? CAM is all about audit matters. I think we have had some discussion as around CAM in the past. Now, as regards the audit report, though we have not looked at that completely, but briefly, whatever you understand. See, audit report is a fixed format. Can you change that? Answer is no. In fact, the language which will get into the audit report, that is also quite standardized. except for the name of the company, year which is there. Yes or no? Yeah. Most of the things are standardized. Okay, so there's a standard common language you get to see year on year. And does it really change year on year? No. Except for modifications if those are there. Yeah. Otherwise, it's all standard. Now, if you look at the stakeholders, it's meant for the stakeholders only. Yeah, so there was a sort of concern, you can say, amongst the stakeholders that this audit report is quite boring. Do you find that boring? Tell me. Yes or no?
Yes, sir.
Yeah. So that was the similar sort of concern amongst the stakeholders. See, there is one way you can say in which auditor is communicated with the stakeholders. What is that? Through his audit report. And that is quite boring. So the concern was that the auditor who spends a lot of time on audit, okay, in some of the large companies, he may be spending around 8 to 9 months. Now, when the auditor is spending a lot of time, stakeholders get to see only this, we can say 5 or 6 pager document, and that too quite standardized. Okay, again, you can say quite generalized also. Now, during the audit, there are a lot of challenges which the auditor will face. Will it always happen? Yes, always. So there is no audit which is free of any sort of challenge. There are definitely some issues which we'll encounter. Yeah, but the stakeholders who are not getting to know about any of these matters. So the CAM was introduced to address this concern. So there were a couple of concerns. One, that the stakeholders should get to know as to what has happened during the course of audit. Of course, you can't really create a story. Okay, you can't really sort of create a descriptive note in respect of this process. Idea was to bring out some of the key things, some of the key matters which the auditor would have encountered during the course of audit and which he believes he needs to communicate to the stakeholders. So that is where the CAM was introduced. And if you look at this section or this element of the audit report, this is not standardized. Of course, the requirements of CAM are there as to, what is CAM, how do you present CAM, what are the requirements in relation to CAM. But CAM, as a matter which is reported, is not specific. Yeah, so that's why the concern that the audit report is not interactive. That's quite boring because you get to see the same thing over and over again. Okay, so that was also addressed with the help of CAM. Because through CAM, auditor is not communicating about any misstatements. Please understand. Because for misstatements, there is a separate element. Auditor is only communicating about those matters which he has faced and which he believes are important for the stakeholders too, on which misstatements are not there. So what is the criteria? So this is again covered by the auditing standards itself. Says the matters which required significant auditor's attention. For example, inventory valuation. So the auditor spent a lot of time, significant effort was involved for audit of valuation of inventory. And time doesn't mean that the junior staff, means the articles and all, they spent a lot of time. It's about the senior members of the audit team. They had to spend a lot of time. Okay. Matters that were most significant to the audit. Now again, if the matter is such which required judgments, significant judgments, which was quite significant to the audit, to the financial statements. Yeah, so these are some of the criteria that you look at, basis which auditor will identify the key audit matters. Okay. But in this case, let's also try to understand as to how does he really cover this. Yeah, so let's try to see as to how this is put down in the form of an audit. Now, in this section, auditor is saying key audit matters are those matters that, in our professional judgment, means it's not a generic thing, it's specific to the company, were of most significance in the audit. Okay. But it's not a sort of qualification. So auditor is not issuing any separate opinion. So that's why he is also giving a clarification that our opinion is in respect of financial statements as a whole. So please don't get confused with CAM. We do not provide a separate opinion on these matters. Now, at the first place, what will he do? He will talk about the matter. Okay. So you can see the matter he will put down. So it's about revenue recognition. There again, it's not about entire revenue recognition. He's talking about some specific contracts. Then he is also referring the same item to the financial statements. Now that is important. That where do you have this item in the financial statements? As a next step, auditor will now explain why did he pick this particular area as CAM. Because during the course of audit, he would have audited a lot of things. So why only this matter has become CAM? So this is where he'll explain as to why did he believe this particular area became CAM. Okay, understood. Then comes the next point. That it's fine that there is a CAM which you have taken care, you have dealt with, but the point is, how did you address that? Okay, so the stakeholders are asking that, what did you do about this? So here again, auditor is explaining in detail what all audit procedures he has performed in respect of this particular matter. Yeah. So this is how CAM is required to be put down in the audit report. Okay, clear on this? Next. About the CAM, I think we have discussed. Now, alongside what I'll do is I'll just also touch upon modifications and EOM, etc. See, there are three types of modifications we may have in the audit. I think you are already knowing that. Qualification, adverse opinion, disclaimer. And I would say that this particular table is a very nice summary picked up from the auditing standard audit in respect of various types of modifications that we have. Various means three. So actually the standard is breaking down these modifications on the basis of two types of situations. Okay, let us just call it as two types of situations. What is the first situation? Situation one is when the auditor has asked for the information and he has got all the required information. So that is what you call as situation first. Information asked and provided for by the manager. So nothing is missed out as regards the information. Second situation is auditor is asking for some information, but the management doesn't know. So it may happen that they do not want to provide or they are unable to provide. In both the cases, point will remain same. Auditor has not received the required information. Okay. So in both the cases, when the auditor is asking for some information, whether he receives that or not, if there is a misstatement which is material, now this is important, which is material, but not pervasive. So what will he do? In both the cases, he will qualify. He will qualify. Let's suppose he is asking for the information, he has got the required information and the misstatements which he has found is not only material but also pervasive. Now, because it's pervasive, so that's why the extent is going to be higher. Yes or no? So it's going to be more severe as far as its impact on the financial statements is concerned. So that's why he will now move from qualification to adverse opinion. Okay. Situation 2. Now, situation 2 is important for you. See, when the auditor has not received some information, he asked for. Okay. He asked for some information, but he didn't receive that information. In that case, do you think he will be able to compute the exact impact of any misstatement? Tell me, will he be able to do that?
No, sir.
No, sir. He cannot do that because
He
no
cannot do
audit. Yeah, he has not sufficient appropriate audit evidence to do that.
Correct, because he doesn't have the required information. Data is not available. So that's why what will he do? He will have to assess possible effect. He doesn't have the actual effect. He will have to assess possible effect. If the possible effect, as per his understanding, as per his assessment, is only material but not pervasive, so what will he do? He will qualify. But if that possible effect is material and pervasive, then here again, what will he do? He will move from qualification to disclaimer of opinion. Okay. Yeah. So that's why we can say we have three types of modifications. Another point that is about some other things which are included by the auditor in his audit. Now, what are those other things? See, sometimes, let's suppose there is a matter. So let's suppose there's a demand which the income tax department has raised. Okay. Now, company is into litigation. So what will the company do? Company will assess as to the merits of the case, whether the company is going to win, lose. And let's suppose its outcome is not known. Something which you also call as contingent liability. So let's suppose company has disclosed a contingent liability in the financial statements. Okay. But this matter involved is quite significant. Or you can say the amount involved is so high that it can have a huge impact on the financial statements of the company. So today, as regards its outcome, there's uncertainty. Okay, so the auditor is not saying that the company is going to lose, so that's why he has a concern that this amount needs to be provided for, but the company is not doing that. No. See, as far as its accounting is concerned, auditor is quite fine. Okay, means it is satisfied that whatever the company has done, that's good. Okay, in relation to the accounting, there's no problem. But this matter is such which the auditor believes is fundamental to the understanding of the users of the financial statement. So that's why what will he do? See, if let's suppose there is something that we discuss in the session, or let's suppose something that you read and you find important, you believe no, from the examination point of view, this is going to be important. It's going to be important chapter. This is important topic. Okay. There are good chances you'll have questions on that topic in the exam. So can you tell me what will you do? Anyone? Over to you quickly.
We have to report in the emphasis of matter paragraph.
No. So I am asking about the exam. I'm asking about the exam. If let's suppose there's a topic you find quite important from the examination point of view, so what do you do?
Definitely, I will go through those chapters and thorough with those items.
So that means somewhere your focus will increase in respect of that particular area.
Yes, sir, definitely.
Yeah, you will want to highlight that. You will just try to make sure that before the exam, you are revising that part.
Yeah,
Yes, sir, we have to emphasize more on that.
Correct. So you what are you trying to do? Actually, you are trying to emphasize on that.
Yes.
Now, same goes with the financial statements. So the company has prepared the financial statements. There's a particular area which is also included in the financial statements. Let's suppose a contingent liability. But can the company highlight that? Can the company color that section in the financial statements? Write that in bold letters? No. Okay, financial statements do not have any such provision. Yeah. So therefore, auditor is now trying to highlight this. Auditor understands that there will be a 6 to 10 page audit report. Then there will be a set of financial statements which may be running into 50 to 60 pages. And when any user will go through this set, okay, so he may be flipping through this. He may not be looking at each and every area in the financial statements. So therefore, to bring his attention to that particular area so that he doesn't skip that, what will he do? he will highlight that portion. Okay, and how does he highlight that? There is a mechanism to highlight that. What do you call it as? Include a para in his audit report wherein he will emphasize on that. He'll just simply say that this is one area which is important for you. It's not a qualification, important for you to read. That's what you call as EOM, emphasis of matter paragraph. Okay, similarly, there is another section in the audit report which is called as other matter paragraph. Now, what is this other matter paragraph? See, other matter paragraph talks about anything which the auditor wants to highlight in a similar manner like we have done for emphasis of matter. But there's a difference between these two. See, the emphasis of matter you will do for anything which is presented or disclosed in the financial statements. Yes or no? Yeah, so what are we trying to do? We are trying to highlight something which is there in the financial statements. So EM can only be there when you have something in the financial statements. But there could be some areas which the auditor wants to highlight, but which is not there in the financial statements. For example, say 23-24. Audit of financial statements were performed by A&E company. Okay. Audit was performed by A&E company. Now, 24-25. B&E company has been appointed as the audit. Is the management required to include anywhere in the financial statements about this change of auditor? Do they have to report that?
No, sir.
No, there is no such requirement. But when the auditor will audit the financial statements, B&E company for 24-25. So along with the 24-25, comparative will also be given for 23-24. So when you give the comparative, what is it that the auditor will do? Auditor will say that audit of 24-25 has been done by me, but 23-24 was audited by another auditor. So will that be a problem? Answer is no. It's just trying to highlight this point. Now, can he give the reference of this matter in the financial statements? No, because this is not disclosed in the financial statement. So what does he do? He will include other matter paragraph. Therein he will write this one. Okay, so that's what you understand about other matter paragraph.
Sir, I have a doubt.
Yes.
Sir, as per SA 250, auditor has to report on the other laws which is applicable to the entity. So whether
Right.
it will be covered under this other matter paragraph also?
See, that's a separate thing. Okay. So that is not related to this other matter paragraph. Other matter paragraph, you can say, is in respect of those matters, areas, which the auditor wants to highlight. Okay. So the idea is what? Auditor wants to highlight something in his audit report. When you are talking about laws, regulations, some of these things, they are the regulatory requirements. They are quite standardized, which are required to be reported upon. In which case, auditor is not trying to highlight that. Number one. Number two, even if the auditor will want to highlight any of those things, so all of those laws and regulations will be applicable on the company. So the company would have put it down in the financial statement somewhere. If the auditor will have to highlight any of those matters, so where will it go? Tell me.
EOM, emphasis of
EOM.
matter.
No, sir. We have the separate section called in the audit report, laws and regulation relating to the regulatory. Say the CARO matter, section 143.1 and 143.3.11, all these things you will report there.
Which is true. But the point is, if let's suppose auditor wants to highlight something on that, there could be some area which he wants to highlight. So there's a matter which is reported in CARO, there's a matter which is reported in laws and regulations section in the audit report, which is fine. But let's suppose there's a matter which auditor wants to highlight. There's no compliance of law.
Yes, sir. When he audit, yeah.
There is a compliance of law, or there is anything around that which the auditor wants to highlight. Okay, something, for example, related to contingent liability. Means the company has recorded that, but the auditor wants to highlight. So how do you highlight that without modification? Through EOM. Why? Because that is something which belongs to the financial statements and which is also presented or disclosed in the financial statements. Okay? Clear? Yeah? Everyone clear?
Yes, sir.
All right. So now what we will do is, now we'll just look at some of the audit reports. And in those audit reports, we'll try to understand about the reporting of opinion by the auditor in various situations. When you have a qualification, when you have a adverse opinion, as to how is that required to be reported and how will that change. Okay. So I think the first part that we have already looked at was about opinion, which was clean. Right? Now what we will do is, we will look at one scenario wherein qualified opinion is given. Okay. So let me just get on to that wherein the qualified opinion is given. Now, in this case, opinion is qualified. So that's why when you start the audit report, you have this opinion para. So now in this opinion para, you will include a prefix. What is that? Qualified. Here again, what do you do? Auditor will say we have audited the financial statements comprising of P&L, etc. Then in the second para, now the second para is important. Here the auditor says, in our opinion and to the best of our information, explanations, except for the effect of matters which are described in basis for qualified opinion. Financial statements give a true and fair view. Can you see this? Yeah. Now in this case, you may be thinking that it's a qualified opinion. Then why is the auditor giving true and fair view? Because it's a material misstatement, but not pervasive. Means if you look at the financial statements as a whole, they are okay, except for some areas. Can you see the difference between opinion and qualified opinion? Means between clean opinion and qualified opinion? Yes or no? Everyone clear?
Yes, sir. Clear, sir.
Okay.
Yes.
Now we will pick up one situation wherein we have adverse opinion. Okay, so now let me just pick up one wherein we have this adverse opinion. opinion. So let me just share this with you now. Now, when the auditor will give an adverse opinion, so let's understand as to how the things will change. Here again, how does it start? He says we have audited the financial statements comprising balance sheet, so and so on. Okay, so the part related to what he has done remains same. Can you see this? We have audited the financial statements. Okay, so this aspect. Now, in the second para, now can you see the difference? He says, in our opinion, because of the significance of the matters, financial statements do not give true and fair. Can you see the difference? Now he is talking about financial statements as a whole. He is not saying except for the impact. No, because the impact is pervasive. Entire financial statements are misstated. So that's why, what does it say? That financial statements do not give a true and fair. So can you now see as to how things have changed? This has become more severe. Yes or no? Right?
Yes, sir.
Now, let's look at one more audit report, wherein the auditor is giving a disclaimer of opinion. Okay. So now, when the auditor gives disclaimer of opinion, there again we'll try to understand as to how the language will change. See, the important part for us is to understand how is the language changing in the auditor's report. Now, in this case, when the auditor is providing a disclaimer of opinion, if you read the first para, this first para seemed to have changed. See, every time when it was clean opinion, qualified opinion, or adverse opinion, auditor was saying we have audited the financial statements, we have audited the financial statements. Yes or no?
Yes, sir.
So this is what the auditor was doing. Now, can you see the language? Auditor says we were engaged to audit. So he's not saying we have audited. Why? Because he have not audited. He doesn't have the information. How can he audit? Can he audit? No. In the second para, what does he say? We do not express an opinion. He's saying, how can I express the opinion when the information is not available to me? Understood? Yeah. So can you see the difference? Yeah.
Yes.
Everyone clear?
Yes,
Yes.
sir. Yes, sir.
Okay. Very good. Then I think we can also look at something around the EOM. Okay. So if you look at EOM, pick up one, the emphasis of matter. Okay, so in this case, opinion is clean. Now the auditor is simply trying to highlight something. So he says, we draw attention to note number 2C of the financial statements. So is he saying any problem? No. He's just asking the user that please go and read that note. Further, he has also clarified our opinion is not modified in respect of this matter. So he is also trying to, again, be very clear and be very specific. So no confusion should remain. Okay. Yeah. So he's saying that you should not get confused that there is a modification in respect of this matter. Okay. Yeah. Now, I think we can also flip through some other sections quickly and then we'll move on to the questions.
So can there be a situation where the EOM para is there, also the modification will be there?
Yes, of course. Of course, it can be there. In respect of a particular matter, there's an EOM. and in respect of another matter, there is a modification. Can be there.
Okay.
Very much possible, right? Now, next point. So there is a section in the auditor's report which talks about other information. What is this other information? See, the other information is about any other information which goes along with the financial statements. So this document which is currently in front of you, you call it as annual report. So actually it's the annual report I've been using of a company. In this annual report, do we only have the financial statements? No. There are a lot of things which are included. Director's report is there. Company may have this reporting on ESG requirements. VRSR reporting is there. Company may have MD&A, which is management discussion and analysis. Yeah, so a lot of information goes along with the financial statement. So if a user will refer this document, user will get to see a lot of other documents as well. Correct? Within the same envelope. It's a big document. So a confusion may happen. Why? Well, let's suppose a user wants to read financial statements. He also comes across something in the MD&A. So let's suppose at both the places revenue is reported, because it's the same information for the company. But let's suppose when he is reading the MD&A, revenue reported is different for the same financial year as compared to what is there in the P&L. Should it happen? Answer is no. But can it happen? Yes, of course, it may happen. Let's suppose there's an error. There's a typing problem. Anything can happen. So that's why there's a responsibility which has been placed upon the auditor. What is that? That whenever the financial statements goes out, any other information which goes along with that, so auditor needs to ensure that the information which is contained in other documents should be consistent with what is there in the financial statements. Now, please remember, he is not required to audit the other information. That's not the responsibility. He is just required to ensure consistency. It's all about consistency check. And that is what you cover within this para on other information. So let's quickly read this para, because on this para I can see a lot of confusion. So company's management board, they are responsible for other information. Now this information comprises the information included in annual report, but does not include financial statements and audit. Now the auditor says our opinion on financial statement does not cover other information. He is clarifying that you should not think that we are auditing the other information. In connection with our audit of financial statements, our responsibility is what? To read other information. And in doing so, consider whether other information is materially inconsistent with the financial statements or our knowledge obtained in the audit. If based on the work we have performed and based on the work done audit report, we conclude there is material misstatement of the other information, we are required to report the fact. That's it. Okay, so he is clarifying that we are only going through that. It's only a reading we are doing. Okay. And it's only a consistency check. There's no separate opinion we are issuing. So you should not consider that the other information is also audited by us. That is unaudited.
Sir, SS 720 will be applicable?
Yes. SA 720, I think it's talk about the auditor responsibility relating to other information. We are discussing about this, that point, that essay only on this other information paragraph.
All right. So now the next section. See, now as a next step, what will he do? He will talk about the management responsibility, board responsibilities. Okay, so everything he'll put it down in detail. So he's putting down everything about the financial statement, that it's the management which is responsible for preparation. So the user should not think that the financial statements are prepared by the auditor. Further, as regards the control, IFC, all of these things are what? These are the responsibilities of the management. And then the auditor will talk about his responsibilities. Once again in detail. Okay. What are his responsibilities? So he's saying our objective is this. Then he's also explaining about reasonable assurance. He is defining what is reasonable assurance. Okay. So everything is very clearly laid out in the auditor's report. And the auditor's responsibility, which he referred to in the basis for opinion paragraph. Remember? So he is explaining all those responsibilities. Right? So this is what he explains. Then, if let's suppose there is other matter paragraph, so he'll put it down. Now, moving further, moving on to the next section, that is about report on other legal and regulatory requirements. Now, what is this? Okay, what is this other legal and regulatory? Sorry, I think I've just sort of just give me a minute. Just go on that page. Okay, so now the auditor is talking about the section which is in respect of legal and regulatory requirements. So what do we have in this section? See, in this section, there are some requirements of the Companies Act on which auditor is specifically required to comment upon. So it's not a separate audit, please understand. During the course of his audit, auditor would have taken care of a lot of requirements of various laws and regulations which are applicable to the company. But there are some specific, you can say, laws on which the auditor is specifically required to comment upon in his audit report. So this section is all about those areas. So one is CARO, which again arises from Companies Act. So now what is CARO? CARO is a kind of checklist, in which case there are a lot of points auditor is required to check and comment upon whether he has done that or not, whether he has done that or not. Okay? So it's a kind of checklist. Because it's a big checklist, covers a lot of points. So that's why in this section, when the auditor will be talking about all of those points, he'll include that as an annexure. Why? Just to avoid any sort of confusion. Otherwise, what will happen? Everything will be included in this section. Okay, so there will be a lot of, hodgepodge. So that's why what will he do? He will give the reference of the annexure in respect of that report on the. And in that section, he will be explaining all those points. So now we can go to that section, Annexure A. So after the audit report, what do we have? Annexure A. Now can you see the referencing? See, this is very important for you. In this case, auditor is giving a reference. So he's saying Annexure A to the independent auditor's report. And then he's putting down all these points. Now, everything which is there in the CARO, he is explaining that point. Further, other than CARO, there are various other requirements. Okay, that is about books of accounts, whether he has obtained information or not, proper books, proper records. Okay, a lot of requirements. I'm not touching upon each and everything. Then there is one more requirement which we can just discuss. Just give me a minute. Right. So if you look at this point F, now the auditor says in the main audit report. Okay, so this document that we look at, what do you call it as? Main audit report. With respect to the adequacy of the internal financial controls with reference to the financial statements of the company, refer to our report in Annexure B. Now, what is this Annexure B? So this Annexure B is a separate report of the auditor on internal financial controls. Now here again, what has happened? Auditor is required to opine upon internal financial controls. Where does this requirement comes from? Companies Act. Would the auditor have performed such procedures? Yes, of course, he would have performed such audit procedures. But still, because it's a specific reporting requirement, so that's why he'll have to include it here. But can he include that entire document over here? No, because again, it will create confusion. So that's why he will give a separate annexure for this. So he'll say that refer Annexure B. So first of all, you'll have main audit report, then you'll have Annexure A, which is CARO, and then you'll have Annexure B, which is the report on IFC. Okay, so if you look at this IFC. Now here again, you can just understand as to how this referencing is covered. See, that is important for you to look at. Just a minute, I think every time I flip pages, that's the problem. Just give me a minute. Let me just go back to that IFC. See, the idea is not to just go through that report, because this report is quite similar. You'll have this opinion, all of those sections wherein you will be talking about IFC. Idea is for you to check as to know how clear this audit report has to be. So first of all, you will have this title, Annexure B to the independent auditor's report. So it's giving the reference of the main audit to begin. Then it says report on the IFC with reference to aforesaid financial statements under clause so and so. So it is giving the reference of the relevant law or regulation. Then it is also giving the reference of section of the main audit report. So it says refer to in 2AF under report on other legal and regulatory requirements section of our report of E1 date. So that whenever the user will read the main audit report, he can refer this Annexure B, and when he is reading Annexure B, he can refer the same to the main audit. So that's how the linkage is always given. Okay. Then, if you go back to the main audit, then I think after various requirements, this audit report is required to be signed by the audit partner. Okay. So you'll have the firm name, firm registration number, audit partner, his membership number, place, date. All of these things are required to be put down. So the report has to be in writing. Now, writing doesn't mean that you will write it on a piece of paper. Means it has to be in writing. Means you'll have this in the Word file, which will print and sign. Then there is another section in the audit report, UDIN. Anybody having any idea what this UDIN is? Can you please explain? UDIN, what is UDIN?
Unique document identification number.
Okay, how does it help? Why is this required?
It has to be
Sir.
generated from the ICAI website every time the auditor issued any certificate, any report.
Right. See, this is a unique identity which is given for every report, or you can say for every assurance report issued by a practicing chartered accountant. Only a practicing chartered accountant can generate this UDIN. And this UDIN, you can say it's a hallmark for the authenticity of the audit. Authenticity in the sense means it can only be generated by a practicing chartered accountant, nobody else. Yeah. So that's why it's a very important, you can say, element of the audit. So if this UDIN is not there, audit report is not considered to be a valid document. Clear? So then of course you'll have CARO. So on CARO there are a lot of clauses. I think you understand about it. We'll just try to discuss some of these clauses with the help of examples only. Then the CARO is also required to be signed in a similar manner. Please remember, place, date is required to be specified. And then you have this report on IFC. So this IFC report again will have to be signed. So every time, what will you have? You'll have 3 audit reports. One that you call as main audit report, second CARO and IFC, third is IFC. But CARO, IFC are not the ones which will apply to every company. So you'll have to check as to to which company they apply to. Okay? But the main audit report you'll always have in case of every company. Okay. Now what we will do is we'll just pick up questions. Just move on to the questions now. Just give me a minute. Okay, so let's look at this one now. Electronics. It's a manufacturing company planned to set up a new R&D center at its existing industrial premises in Pune to mark its 25th anniversary in the financial year 2025. To expand the premises, company decided to acquire an adjacent plot of land owned by Miss Reena, an executive director of the company. Company offered to exchange one of its underutilized land parcels located in another industrial area rather than having a cash transaction. Okay, so it appears they are just trying to enter into a barter deal. So the company's land was nearly twice the size of Miss Reena's land. It was considered less commercially useful. The exchange was approved by the board and a registered agreement was executed in January 2023. Okay. As an audit engagement partner for this company, Harsh Electronics Limited, what additional audit procedures would you perform in respect of this land, okay, this transaction, and what will be your responsibilities in respect of the report? Means when it comes to the audit report, what are going to be your responsibilities? Over to you. Yes. Over to you. Quickly. So what are going to be your considerations?
Sir, it is a related party transaction.
Okay.
So we have to go through the agreement and what terms and conditions have been agreed upon.
Okay, so I think that's about the audit procedures.
Yes.
Right. And what about the reporting requirements?
And since,
So in terms of
since
the
the company
reporting
has given the twice size of the land in exchange of the land which is acquired from Miss Reena. So I
right.
think that there will this transaction is not at arm length.
Okay.
So we have to report in this matter into the I think emphasis of matter paragraph to draw the attention of the users.
Sir,
Yes. Yes.
sir,
Please go ahead.
sir, in this case, this company has ended with the related party transaction,
Right.
and also there is a non-cash.
Yes.
The cash is not. Thing is that actually we have the separate requirement and the CARO, sir, section 143 with the class 11
Correct.
of the section 143, the
Right.
company auditor report order 2020.
Right.
See, we have the specific clause which is talk
Right.
about
Right.
when the company entered into any non-cash transaction with the director or
Right.
a person connected with him directly,
Right.
and that particular section will apply. Then
Okay.
we need to report under that CARO.
Okay.
Say this is a related party transaction,
Right.
and we need to check with that company section also in that relating to non-cash, whether it deemed to be a profit in place, profit in office. I'm not getting the exact point over there.
No worries.
Yeah, place of profit, place of profit.
Okay.
That we have separate section also there in company site regarding that.
Okay.
We have to check and we have to report on the CARO.
Okay. So your main point is that somewhere in CARO it will have to be reported.
Yes, sir. We need to report under CARO.
Okay, great. Anyone else? Any more thoughts? No? So let's look at this. See, in the given case, company has entered into a non-cash transactions. Correct? It's clearly there. And this non-cash transaction has been entered into with the director. So that means a related party. Now, this transaction was approved by the board and was executed through a formally registered agreement. This agreement was entered into without any cash consideration and instead relied on the relative value and strategic importance of the properties being exchanged. So that's how it goes. As this transaction involves a director and this being non-cash in nature, it attracts the specific attention from an audit perspective, no doubt, and also the reporting requirements under CARO. Okay, so if you look at this clause 15 of CARO, it says whether the company has entered into any non-cash transaction with the directors or persons connected with him, and if so, whether the provisions of section 192 have been complied with. So that's something you'll have to look at. In addition, it's a transaction with related party. So there are two parts to it. So the provisions of section 188, which is again the requirement of CARO, will have to be looked at. Okay. Provisions of section 189 requires a register to be maintained, wherein the contract with the related parties is entered in. So you can just very simply say that some of these requirements which are there in respect of CARO, one will have to look at in the given case. Okay. Next. AAA Tax Solutions Limited is in the process of finalizing its financial statements for the year ended 31st March 25. Company is required to present comparative financial statements, including figures for the year ended 31st March 24. Roshan and Company Chartered Accountants has been appointed as statutory auditor for current year, means year ended 31st March 25. During the audit, CA Roshan notes the following. 23-24, there was another auditor. 23-24, the opinion was adverse. Now we don't know. Audit is going on. What was the reason for adverse opinion? There was a material misstatement in valuation and disclosure of trade receivables. Okay. As regards the presentation of financial statements, figures presented as comparatives in the financial statements 24-25 audit. I think it should be 23-24. It appears to be 23-24. Okay, so figures presented as comparatives in the financial year 23-24. But let's understand as to what they are trying to do. So in 24-25, what do you have? Comparative financial statements. Okay, current year plus previous year. What are the duties of CA Roshan while reporting on the current year's financial statements, considering prior year's audit report had an adverse opinion? What modifications or disclosures are required in the current year's audit report in accordance with the requirements of relevant auditing standard? Over to you. Yes. Over to you.
So in this case, the previous year there was a adverse opinion is given with respect to the trade payable.
Right.
If it was that time it based on the audit, sufficient audit evidence, appropriate audit evidence, then it's identified as a effect, and the possible effect, they determined that it is a material and pervasive. Then he decided to report it as a adverse opinion.
Yes.
So now in this current year,
Yes.
the thing is that if that those items remain uncorrected,
Right.
then definitely he will give the modified opinion based
Okay.
on whether if it is a material not pervasive, then the effect on that material items materially misstated,
Okay.
then he will give the
Right.
qualified opinion. When if he
Okay.
is unable to obtain the sufficient and appropriate audit evidence, and
Yes.
then the possible effect of
Yes.
uncorrected misstatement, undetected misstatement, it's a
Right.
material and also the pervasive nature, then definitely he will give the adverse disclaimer of opinion. But consider this, he given the adverse opinion, which means only relating to the trade payable.
Right.
He unable to obtain the sufficient appropriate evidence in the pervasive nature. So matter is a substantive. So hence he provided that adverse opinion. So he remain if it is uncorrected,
Yes.
then in this year also he can give the modified opinion.
Okay. Anyone else? Any more thoughts on this? No? So let's look at this. See, in the given case, this auditor noticed previous year financial statements contained adverse opinion. Okay, and which was due to the trade receivables. So now which auditing standard you refer? SA 710, which is about comparative information. If the auditor's report on the prior period as previously issued included an adverse opinion and the matter which gave rise to the modification is unresolved, so the current year's auditor shall modify the auditor's opinion on the current period's financial statement as well. Obviously, because that will continue. In the basis for modification paragraph, auditor shall either refer to both the current period figures and corresponding figures in the description of the matter giving rise to the modification. Okay, when of course the matter is material. Or in other cases, explain that audit opinion has been modified because of the effects or possible effects. Means it could be due to receipt of information, then the auditor has got the impact, or maybe the information is not received, so that's why you're trying to compute the possible impact. Okay. In the present case, the matter leading to prior year's adverse opinion, that is material misstatement in the trade receivables from the prior year, remains uncorrected. So that's what we understand from the information. So that's why what should the auditor do? Auditor should modify the current year's audit opinion. Okay, clear?
Sir, in
Everyone
this case,
clear on this?
sir, in this case, adverse opinion will be issued, sir, in current year.
Sorry, again, same problem of voice.
Sir, in current year, adverse opinion will be issued by auditor, sir.
Yes, so he'll have to again reassess the situation. Most likely it has to be adverse. Again, if the impact continues to be pervasive, so he'll continue with adverse.
Okay,
Okay,
sir.
but we'll have to again reevaluate. Okay,
Yes, sir.
clear? Everyone clear?
Yes, sir. Clear, sir.
All right. So, and I think what we can do is we can take a break now. Yeah. And then we can continue after the break.
Okay, sir. Thank you.
Sure, we can take a break now. Okay, so let's look at the next one. In this question, it's specified it's related to Caro. Relon Limited has a turnover of 650 crore during financial year 23-24. Outstanding dues towards income tax 15 lakhs since July 23. When inquired by the auditor, company's management informed him that they have filed an objection letter for the said department tax authorities. However, no response is received from the department. Is there any reporting responsibility of the auditor? Over to you. I think this is specific to Caro.
The clause 8. Clause 7, sir, sorry.
Okay, so what is the reporting requirement? What will you report? How do you report?
Sir, if there are statutory dues on the reporting date more than 6 months, then we have to report.
Okay. So in this case, how do you report it? What do you do in this case?
Sir, in this case, however, no response is received from the department.
Okay.
The management, they have filed the objection letter. Okay.
Right.
And also the financial outstanding due towards the income tax.
Yes.
Say outstanding due income tax means it's a demand raised.
Right.
And the due is also pending.
Right.
And in this case, no response received from the department.
Right.
So, which means we cannot treat it as a
Yes.
dispute due.
Okay.
Because that mere representation will not say constitute the dispute. So
Okay.
in this case, there is a 2023-24 are there. It's from July 2023. August,
Right.
September, October, November, December, January, February, March. It's
Right.
more than 6 months. It's about 8 months in this case.
Right. Right.
In the unpaid dues, if there is any unpaid statutory dues, if it's greater than 6 months,
Yes.
then the outstanding arrear, it has to be indicated
Right.
in the statutory due section of the clause 7
Okay.
of the Caro.
Right. In this case, what do you do then? Tell me specific to this case, what do you report?
We will report that the amount outstanding more than 6
Report
months.
the amount stand. Okay, great.
Yeah.
So let's look at this. So if you go by this clause under Caro, auditor has to report whether the company is regular in depositing undisputed statutory dues. Okay, so that's one. And if not, extent of arrears of outstanding statutory dues as on the last day of the financial year concerned for a period of more than 6 months from the date they become payable. Okay, so that's one. Further, auditor is also required to comment where the statutory dues referred to in have not been deposited on account of any dispute. Then amount involved, forum where the dispute is pending shall be mentioned. Okay. In the given case, what do you have? There's an outstanding income tax liability. Although the management has filed an objection letter, no formal dispute has been raised, and the dues remain unpaid for more than 6 months. Okay. So in this case, what should the auditor do? Auditor should consider this as undisputed statutory due. Yeah. So the main point is, where do you take it? Do you call it as a disputed one or undisputed one? So this continues to remain undisputed. Yeah. And if this is undisputed, then when do you report it? When it is outstanding for more than 6 months. Okay. Yeah. So in this case, it will have to be reported as undisputed. Okay. Clear?
Yes, sir. Clear, sir.
All right. So then I think we have got one more question here. Let's look at that. During the audit, Kunal found that physical verification of inventories has been conducted by the management on regular. Following is the summary of inventory. As per physical verification, service books as at the year end. So we are given this complete comparison. So amount which is there as per books and what was there as per physical verification. So it appears there is a shortage for raw material, for WIP, for finished good. For stores and spares, it appears there is excess. All in all, it's a shortage. Now, in this case, you are required to comment to how do you report it, considering the provision of CAM. Yes.
Sir, we have to report under clause 2. Under
So what do you report? How do you report? See, don't give the close number only. Please give this complete reporting requirement that you have. So what will you report? So let's suppose if you were to draft the audit report, how do you do that? Tell me.
Sir, this is a inventory case. Inventory actually has to be verified once in a year.
Right.
That is as per the requirement.
Right.
If there is a discrepancy found during the audit,
Yes.
if 10% or more,
Yes.
then how it was dealt in the books of accounts by the management,
Right.
that has to be verified by the auditor,
Right.
and accordingly we need to report it.
Okay. So in this case, when you look at the reporting requirement, what is that for inventory? That is for inventory. See, if you look at the provisions of CAM, it requires the auditor to check whether the physical verification was conducted during the year or not. And this is generally conducted towards the year end, near around the balance sheet date. So that's when most of the companies do this. But of course, different companies may have a different cycles during the year. They may be covering that. Okay. And if the physical verification has been performed, it should ideally match with what is there in the books of accounts. If that doesn't match, then of course it will lead to a reconciliation. Yes or no?
Yes, sir.
Yes. Auditor is required to report whether any discrepancies of 10% or more in aggregate for each class of inventory. Now each class means raw material is one class, WIP is one class. Okay. And if so, whether they have been properly dealt within the books of accounts. Now, if you look at these classes, on an overall basis, we discussed there is a shortage. If you look at category by category, we found 3 categories have a shortage, 1 category has excess. See, but the point is not that whether it's excess or shortage. In both the cases, it's a problem. So even if there is excess inventory, that's a problem. Why it is not matching with the books of accounts?
Yes, sir. Whether it is negative or positive is not a matter.
Correct. In both the cases, it's a concern which the auditor needs to look at. But we are not required to comment upon the audit procedures. We are only required to comment upon the reporting requirements. So in this case, therefore, discrepancies in the value of finished goods more than 10%, stores and spares more than 10%, they will be specified in the auditor's report, that is CAM. Okay, clear? Any questions, any doubts so far?
Sir,
Yes.
what will be the basis of calculating the percentage? As per books or as per verification?
Both you will compare. That's how you will get this. Yes or no? You will compare both.
नहीं तो बेस में क्या लेंगे सर? बेस में जैसे परसेंटेज कैलकुलेट करने के लिए
See, the base you pick up. So of course, books you will pick up the base and you compare it, because your basis will always be the books.
Okay.
Right? So let's suppose books as book, you have got 100 in the books. So now everything that you are comparing it to the books. So let's suppose you are getting 120. So we'll say 20% is the excess. Let's suppose you get 90. 10% is the shortage. Because it's the books of accounts that you are auditing. Clear?
Yes, got it, sir.
All right. So then I think we can look at some more questions now. Just a minute. So I'll share another document. I would request everyone to participate in this. Okay, try to answer these questions. That's important. That's how you'll get to have this clarity around the concept. If by chance that is not there, further you'll also get a clarity as to how to respond on that. Okay, because similar sort of questions you are going to get to see in the exams. And there again, when you try to approach this, even though you are not writing now, you should think about it, the way you will answer this in the exam. Okay, so if your answer is descriptive, that is good, right? Below is the draft extract of audit report of a listed company. Para A below reflects certain matters stated in the audit report, communicated with CFO of the company. Para B is in the nature of auditor's response to the said matter. Okay. Company recognizes revenue when the control of goods is transferred to the customer at the net consideration which the company expects to receive for those goods from the customers in accordance with terms and conditions of the contract. Okay, so this is para A. Terms of sales agreements based on the terms and conditions of the contracts and the nature of discounts and rebates create complexities that require judgment in determining revenues. Okay, so this para A reflects the matters which are stated in the auditor's report and which have been communicated to the CFO. Para B. We read the company's revenue recognition policy and assessed its compliance in terms of Ind AS 115, revenue from contracts with customers. We assessed, designed, and tested the operating effectiveness of internal controls related to sales and rebates discounts. We tested on a sample basis that revenue has been recognized in the proper period with reference to the supporting documents, including the confirmations from the customers. From the description given above, para A, para B, identify what auditors are trying to report here, under what heading such reporting be done in the auditors. Means they are just simply trying to ask you that when you see this reporting, so which section of the audit report in a way is being looked at, is under discussion? I think it's very simple for you to answer. Quickly, over to you.
Sir, it is a key audit matter, sir.
Sir,
Sorry?
It is a key audit matter.
It is a key audit matter. Okay, so
Yeah.
why do you say it's a key audit matter?
It is related to revenue recognition, and
So every time it is related to revenue recognized, it has to be key audit matter. Can we say that?
sir,
Or
it is
are you trying to say that revenue recognition, whenever it has to be there, it has to be a key audit matter always? Will it
not
be right
always,
to
sir,
say
but
that?
not always, sir, but he has terms and condition according to terms and condition which is specified in contract.
Yes.
So, sir, so it is related to, sir. I think it is a key audit matter.
So you're
Sir,
saying because the terms and conditions are explained, so that's why it's a key audit matter, is it?
Yes. Yes.
Okay, very good. Yes.
sir,
Yes.
actually, here in this matter relating to the revenue recognition,
Yes.
yeah, it is clear that the terms of sales agreement based on the terms and condition and the relevant contract and nature of discount and rebate and create complexity in this requirement judgment and determining revenues. See,
Right.
here, whenever the auditor is feel that it's a utmost significant,
Right.
and also wherever there is a complexity is involved
Yes.
based on the professional judgment and the
Yes.
experience.
Yes.
And in the paragraph A also is clearly is discussed with those charged with governance.
Yes.
Whenever we see, this is a key audit matter. First of all, I am trying to say that it is a key audit matter. Why it is a key audit matter? I am telling I am giving the explanation.
Right.
The thing is that whenever we are reporting the key auditor matters,
Right.
we need to actually we need to those charged with the direct the governance only,
Right.
those item only we can put under the CAM.
Okay.
So he is already discussed with the key those charged with governance, and also
Yes.
it is a complexities is involved,
Right.
and based on the professional judgment and the experience.
Yes. Okay.
So it is an appropriate place to discuss with that a CAM section in the audit report.
Okay. Anyone else? Anyone else? Please? No? All right. So let's try to understand. See, about the CAM, we discussed. About the CAM, we basically discussed two things. What is CAM? Why it is required to be reported? And how is this required to be reported? Okay, now, in this case, if you look at the reporting which has been done in the audit report, now in this case, the question is not asking you whether the reporting should be done or not, whether the reporting which has been done is correct or not. They are, in fact, asking you that whatever has been reported in the auditor's report, which section of the audit report can you relate this to? Yes or no? So if you go by the auditor's report, I think we have looked at the auditor's report. Isn't that quite standardized? Does it really talk about any specific matter of the company at any place? Answer is no. But in this case, the reporting that you look at, it talks about revenue recognition. It talks about terms of the contracts. It talks about complexity of the matter. It also talks about the audit procedures which the auditor has performed during the year. So this is only possible in case of a CAM, because as regards CAM, we discussed that it's the only one section which is not standardized, which is very specific to the entity, which talks about the entity, and which is actually interactive. Interactive means wherein the auditor is interacting with the stakeholders. Further, if you look at this para B, this para B talks about the audit procedures. So where do you report the audit procedures? Under CAM only, in respect of the matter. And if you look at this para A, this para is all about the reason as to why that matter is getting reported. Yes or no? Yeah. So all of these are the requirements of CAM. So the above described matter can only be associated to that. Yes or no? Clear?
Yes, sir. It also talks about the test of controls and test of details also there.
Yes.
Yeah, but
see, that
how
could be related to any audit procedure. So I think again, don't think that because it talks about test of detail, test of control. No. We are just simply saying any audit procedure which is performed, that is explained there.
yes, sir. Yes,
So
sir.
that's how it goes.
Yes, sir. That's true. But in the given case, it is a given. The
Yes,
test of details
that's
also
correct.
is given. That is
Yes.
what I am coming to say. It is a key auditor matters.
Yes, that's correct. Absolutely correct. Right? All right. So let's look at next one. PTD Limited is engaged in the business of executing construction contracts for its clients. Okay. So they have a specific business of construction. There are non-current receivables outstanding in the financial statements of the company as on 31st March for 500 crore. Such amounts represent caused by claims raised by the company on its clients related to cost overruns necessitated due to delay claims, change in work specifications, and the related matters. Besides negotiations, I think besides negotiations, the company has also gone for arbitration in some of the said cases. The management of the company has considered the above amounts to be fully recoverable as stated in the notes to accounts. CA Piyush is the auditor of the company, and the CA has relied only upon management representation in this regard. Okay, so that's one. So I think the only evidence which he has obtained is management representation. Fair enough. Okay, so that's one. Besides, he has decided to include the said matter in emphasis of matter. Okay, so it's something which he is going to include in the EOM. How do you view decision to include above matter in the EOM para by the auditor of the company? Over to you. Yes, over to you.
Sir, could you please show the question above?
Yes. Let me just do one thing. Just give me a
Sir, here CA is in fault, sir, because emphasis
Just
of the
now.
matter,
Just give me a
emphasis.
minute. Just give me a minute.
Yeah, is it possible to do the entire question at the single place?
So I'll just do that. Okay. So that you can refer it at one place.
Yeah, good, sir. Yeah, now it's visible.
Yes, I think somebody was trying to explain.
Yes,
Ravi,
sir.
you are there?
Yes, sir. Yes,
Yes,
sir.
sir.
Yes,
Please go ahead.
sir. I think here CA is wrong. He's reporting by emphasis of matter, but the matter is more serious, and he must obtain evidence. Otherwise, he qualify the report, sir, or modified the report. Not emphasis of the matter.
But what makes you say auditor needs to qualify? What is your basis? Let's
No,
suppose
no,
if you were the auditor.
no, sir. Qualification. Yes, sir.
Sorry?
Sir, here modification of the report is required, sir. Either disclaimer, I think disclaimer is required.
Okay, so you're saying disclaimer should be given. But can you tell me the basis for your opinion? When you are saying
Sir,
disclaimer,
sir, I am not
why a
obtaining
disclaimer should
the
be given?
sir. I am not obtaining the evidence, sir.
Okay. So every
Yes, sir.
time you do not obtain the evidence, do you go to the disclaimer always?
No, sir. But here matter is also pervasive.
Okay, what makes you say it is pervasive?
Yes, sir.
No, no. So my point is, why do you think it is pervasive?
Because the amount is sir, material amount is a big amount. 500 crore is 500 crore is a big amount, sir.
No, so are you trying to say big amount means pervasive?
Yes, sir.
Okay, so what is the difference between material and pervasive then? Can you please explain?
Sir,
Difference between material
material,
and pervasive.
sir, material also be in a small amount which relates to when reported to the law or regulation required.
Okay,
But pervasive means which is a big level means
what do you
financial
mean by
statement.
big level?
Yes, sir.
Think
My
some.
understanding is this, sir.
Sorry?
This is my understanding, sir.
No, I can understand. But what do you mean by big level?
Means
You
big
mentioned
amounts
it's a big level.
covers financial statement as a whole, sir.
Okay, okay, very good. I think that is the point. Something which covers financial statements as a whole. Because material is also a big amount. Material is also a big level. But
Yes, sir.
when you are saying a material error that is not pervasive, means it is restricted to a particular area, which
Yes,
is
sir.
not flowing to financial statements as a whole. Okay, so that's how you differentiate.
Yes,
So we are saying in this case, as per your assessment, impact is not only material but also pervasive. That's why
yes,
you
sir.
will go. Correct?
Yes, sir. Yes, sir.
Okay.
Sir,
What about others?
sir, actually, in this case, the PTE
Yes.
Limited, they engage in the
Yes.
construction contract, and there are non-current receivables. Non-current receivables means it is the receivables is more than the 1 year period, more than the operating cycle, I mean to say.
Okay.
Say operating cycle will be vary based on the operation. It can be 12 months, more than 12 months also will be there. But in this case, the non-current receivables, it's outstanding on the financial statement which pertaining to 2024. Amount is 500 crore.
Right.
But in this case, the auditor is received only the management representation alone. Here the thing is very clear that the management representation will be the evidence, audit evidence, there is no doubt, but that is not a conclusive evidence. So in this case, the sufficient and appropriate audit evidence is not received, collected.
Okay.
Say if the company, if it is a material, the possible effect, since he is not get the sufficient and appropriate audit evidence, so that the possible effect, if it is a material, then he will give the qualified report, opinion.
Yes.
If it is a effect of possible uncorrected misstatement pertaining to the last year,
yes,
then definitely he will give the disclaimer of opinion. But giving in that emphasizes paragraph matter is not appropriate. based on that, see, the considering the FO FAT what I discussed, either it can be the qualified opinion or the adverse opinion.
Okay. But you are talking about two types. So why will you say qualified or adverse? Why can't you be specific that it has to be a qualified or adverse opinion?
Sir, whenever that question is silent, we need to come to the
Yes.
yeah, we can choose either the qualified
So you're saying the
opinion.
information in the question is not available for you to get
Yeah,
onto that
yeah,
specific answer. Is it?
yeah, yes.
Okay.
In that
Alright.
case, in that case we can choose either qualified opinion or adverse opinion.
Okay, great. What about
Anything we can
others?
provide.
Yes. What about
If it is
others?
a specifically, yeah.
Yeah, please go ahead. Please continue. Please complete.
Sir, in the case of the question is clear, there's a persuasive nature, then
Yes.
definitely we can go for the to choose means we have to go about qualified opinion only.
Okay.
Yeah.
All right. Great. Anyone else?
Sir, in this question, the how we can get the materiality level and what amount will be considered as material and pervasive is not being given. So we have to provide both the options that if it is a material and pervasive, then the disclaimer of opinion will be issued, and if it is
Yes.
material but not pervasive, then the qualified opinion will be issued.
Okay. And what if this is not material then? Then the third situation can also arise if we go by that understanding, isn't it?
Yes, sir.
All right, great. So let's look at this. See, I think somewhere the understanding of EOM is very clear. We have already looked at it. Okay. What do you do in case there is an EOM? We already understand that. EOM clearly specifies that modification is not there. So the given auditor who is thinking about EOM believes modification should not be there. Yes, that's his point of view. But the only evidence he has obtained is what? Management representation. I think that is where the problem lies.
Yes, sir.
He has not performed any other audit procedures like
Correct.
verification of the contract, status of arbitration proceedings. If you look at this evidence, management representation letter, no doubt it's an audit evidence, but is it conclusive? No, it is not conclusive. Right? Therefore, just because he doesn't have the information, he has not applied the procedures, he should not be highlighting any matter as EOM. Okay, that's what he should not really do. Auditor should form his opinion by performing necessary audit procedures, which doesn't seem to have happened in the given case. It is only when he concludes that the modification of the opinion is not required on the basis of the outcome that he will have, said matter may be included in EOM.
Yes, sir.
Okay? And that too, if it meets the criteria of EOM, not otherwise. Okay, provided it meets the criteria of EOM, not otherwise. Yeah. So in this case, what is the problem? Problem is only relying upon representation and not doing anything beyond that. Right? Yeah.
Yes, yes, sir.
So that's why auditor is just trying to cover up that I have received the representation. I'll just highlight this in the auditor. This matter is there. I've got the representation. But does it help? No. That doesn't help. Okay.
Yes, sir. In this case also that the further audit procedure he can do when the written depreciation is not received. Mere representation that he can inquire about that further audit. Say example, if the any further money is received in the near future, 1 or 2 months period.
Yes, of course. He'll have
That
to
he
look into it.
can, yeah, he has to look into those items, and
Correct.
accordingly he can form an opinion. If that is sufficient and appropriate, then he can conclude that is not to give the modified opinion. Then that case he can give the EOM paragraph.
Correct. That's how he'll have to go about it.
Yes, sir.
Okay. All right. So now let's look at next one. ADKS and Company LLP. They are newly appointed statutory auditors of PKK Limited. So it's a listed company. Sorry, it's a limited company. During the course of audit, statutory auditors have come across certain significant observations which they believe could lead to material misstatement of the financial statements. Management has a different view. Now, this is again important. So there's a difference of opinion and does not concur with the view of statutory auditors. Considering this, statutory auditors are determining as to how to address these observations in terms of their reporting requirement. I think this is a very simple one. Over to you. Tell me. Tell me. Quickly, what do you do in this case?
Sir, see here the case is very clear. The statutory auditor come across significant observation,
Right.
which they believe would lead to a material misstatement
Okay.
to the financial statement. See,
Right.
if the material misstatement, if he has a strong opinion and a strong evidence,
Right.
then if the management has the different view and does not concur in the view of the statutory auditor,
Right.
which means there is a limitation, which means they are not providing the things.
Okay.
Say if it is a material and
Right.
he unable to collect the audit evidence and appropriate audit evidence.
No, but I would just stop you here.
Okay.
See, this is what I've discussed in the previous sessions also.
Okay.
Every time what you should do is you need to be very specific to the requirement of the question.
Okay.
Now, what does it mean? Over here, two situations were possible. One, that the auditor has got the information. Second, he doesn't have the information. Do we have any such fact pattern available? No. So
No,
what do you
it's
assume? You'll assume because the auditor is quite clear. So if you look at the language, auditor believes could lead to material mistake. So that means he
okay.
has got the sufficient information. He has come across certain significant observations. Okay. So let's not go by the lack of information or that possible effect.
Okay.
I would say let's go by the actual effect on the
Okay.
basis
See,
of the information which has been received. Okay.
okay.
So let's go with that understanding.
Okay, sir. So
So now tell me.
okay, in this case, the material misstatement is there. He has the
Right.
conclusive evidence for that. Then the
Right.
management is not agreed. See,
Right.
it is a responsibility of the management to the correct it and reproduce the financial statement in the correct manner.
Right.
If the uncorrected statement exists, if not
Yes.
corrected, uncorrected is expected, then definitely he will provide it is a material misstatement. If it is, the material misstatement alone, it's not a pervasive, then he will provide the qualified opinion.
Okay.
If it is a perverse material as well as that pervasive nature, then
Right.
definitely he will provide the adverse opinion.
Correct. So I think whether the misstatement is pervasive or not, that we don't know. Okay. That
Say,
information is not available.
So when the pervasive is not available, then we have the choice. We can provide either qualified report or adversarial report. It is our choice.
Correct. 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 Yes. Anyone else who would like to add to this? Though it's quite generic, I believe it's more of a generic answer that you have to specify. Yes. So let's look at this. So auditor in this case needs to determine the modification. As we discussed, qualified opinion if it is not pervasive, adverse opinion if it is pervasive. And of course, the third situation is about the disclaimer, which is something which the auditor will get into if the information would not have been provided to him. Next, TUV Limited is a company engaged in the business of manufacturing spare parts. So they are in manufacturing business. Saroj and Associates are the statutory auditors for 23-24. During the audit, CA Saroj noticed company had a major customer, namely Korean Mart from South Korea. Owing to an outbreak of war and subsequent destruction leading to government ban on import and export in South Korea, demand from Korean Mart for the products of this company ended for an unforeseeable time period. When discussed with the management, what has happened? CA Saroj was told that company is in the process of identifying new customers. Now, this was one of their major customers. Okay. CA Saroj understands that though the use of going concern assumption is appropriate, material uncertainty exists. This fact is duly reflected in the financial statements for 23-24. How should CA Saroj deal with this matter? Over to you.
Sir,
I think we discussed this quite a lot.
Yes.
Previous session.
Yes, sir.
Yes.
Sir, in this case, it is a clear evidence that the company, there is a possible alternative also. See, the operation, they are ensuring it.
Okay. Right.
But considering if the operation is not ensured, the business should execute. See, the going concern is always is paid the operation, and it's a foreseeable future.
Right.
But here in this case, the main customer of one person in South Korea.
Right.
And for that the alternative customers also identified by the company.
Okay.
And they are going to work with them.
Right. So what do you do?
Yeah, and you see, if it is a material uncertainty,
yes.
So at most material uncertainty is confirmed.
Right.
Then we can give that a report under audit report is called material uncertainty relating to the going concern.
Okay.
Below the basis for opinion.
Okay.
Above the CAM.
Right. Anyone else would like to add to this? Quickly, any different thoughts?
Sir, it is the case of B1 which we have discussed day before yesterday.
Right. Very good. Exactly. So I think this is how you can just remember some of the points. Very good. So now in this case, very clearly it's given in the question. Okay, so this is again one of the questions you should pray, because most part of the solution is given in the question itself. Going concern assumption is appropriate. You don't need to assess that. So if the going concern assumption is appropriate, what do you need to check? adequate disclosure is given or not. So it appears it is appropriately disclosed. So that is what you understand. This fact is duly reflected. Duly reflected means adequate disclosure is given. So that's why, what do? Do you qualify? Do you modify? Do you give adverse opinion? No.
No, we cannot give.
So the modification goes out of the picture. But because material uncertainty is there, that is again clarified in the question itself. So that's why you will have to include one para in the audit report about this material uncertainty, wherein you will also clarify that it's not a modification. Okay, it's similar to what you do in case of year. Yeah, you are just trying to highlight this point. Okay.
Yeah, in a separate section of the audit report.
Yes. So this section in itself is a separate section.
Yes, sir.
Right?
Yes.
Okay, so let's look at the next one. Sun Moon Limited is a power generating company which uses coal as raw material for its power generation plant. Company has been allotted coal blocks in the state of Jharkhand and Odisha. During the financial year 23-24, a scam regarding allotment of coal blocks was unveiled, leading to a ban on the allotment of coal blocks to various companies, including Sun Moon Limited. This happened in the month of December 23, and as such, entire power generation process of Sun Moon Limited came to a halt in that month. As a result of such ban and the resultant stoppage of the production process, many key managerial personnel of the company left the company. Okay? So they moved out. There were delays in the payment of wages and salaries, and the banks from whom the company had taken funds for project financing also decided not to extend further finance or to fund further working capital requirements of the company. Okay. Further, when discussed with the management, statutory auditor understood that the company had no action plan to mitigate this situation. As of now, right? Further, all such circumstances were not reflected in the financial statements of Sun Moon Limited. What course of action should the statutory auditor of the company consider in this case? Over to you. Over to you, quickly.
Sir, your adverse report will be issued, sir, because there is a question on the going concern assumption, sir. Appropriate.
Okay.
So here, sir, there is no mitigation plan.
Right.
So here, I think adverse report is appropriate.
Okay, so you're saying the opinion should be adverse, is it?
Yes, sir.
Okay, what about others?
Sir, here the going concern will be the matter.
Going concern will be the matter, okay?
Yeah. And also with respect to CARO,
Right.
there is a one specific provision is there. On
Right.
clause number 9, whenever there is a default in repayment of dues,
Yes.
here there is a working capital requirement.
Right.
They taken the fund and the financing also decided not to extend the further finance.
Right.
So in this case, this is a default is happening.
Right.
Yeah, see, whether willful defaulter, I think it is not a case here, but company has taken fund project of the decided not to extend the further or fund of working capital requirement of the company.
Okay.
Here we need to report the CARO and stating that lender wise we need to provide the nature of borrowing, name of the lending, and delay in
I think I've lost you now. Are you there?
Yes, sir.
Okay, so I think I lost you in between. So you're saying that one, you will look at Caro reporting. So that's one. What else?
Once I will look at the Caro reporting, other as well as I will look at the going concern also, I will look at it.
Okay, so in terms of going concern, what do you do? Let's suppose if
Going concern, it is the company operation itself shut down and banned,
right,
and operation is not and also there, and the wages and salary itself is not paid.
right,
And for the near future, at least 12 months, company will survive or not. That is a questionable here.
correct,
Considering all this, they actually the resultant stoppage of the production itself, they stopped. Key managerial personnel are left from the company, and there was
Yes.
a delay in payment of wages and salary, and the banks from the company were taking the fund also. They are also
Yes.
not ready to extend that finance.
Okay,
So having all this situation, considering in the situation, the
yes,
going concern will be the impacted. SE 570 will applicable, so that there is a material uncertainty, the pervasive is there.
right.
So that we can definitely go for the modified opinion.
No, what type of modified opinion?
We can give that adverse opinion.
Okay,
Straight away we can give the adverse because the company the stability is not there.
right,
So we can give the see here normally when the material uncertainty is there, when there is a material only that things we will give the separate report in the separate section. The modification is not required on the opinion paragraph, but here we can straight away give the modified opinion in the opinion paragraph itself. Adverse of opinion, and we can give the basis of adverse of opinion.
okay. Anyone else would like to add to this? Any different thoughts?
It is a case of first means A, which we have
Okay.
discussed.
So what does it mean? What do you report? How do you report?
We have to provide the adverse opinion.
Okay, so you're
Because it's
saying
a
in this
pervasive
case, okay, so you'll take it to adverse opinion. All right. So let's look at this. In the present case, following circumstances indicate inability of the company to continue as a going concern. Of course, we have looked at that. Biggest concern has been around the non-availability of sound action plan on the part of the management. Correct? But if the management doesn't have a clarity, so what will happen? Going concern assumption will become inappropriate. Yes or no?
Yes, sir.
So if that is reflected in the financial statements of the company, it's good. It appears it's not reflected. So that's why, what should the auditor do? Adverse opinion he'll have to choose. So that's the first thing. Okay. Second is about the Caro reporting, okay, which requires on the basis of the financial ratios, aging, expected date of realization of financial assets, payment of financial liabilities, auditors' knowledge of the board or the management plans, whether the auditor is of the opinion that no material uncertainty exists, that the company is capable of meeting its liabilities as and when they fall due within a period of 1 year. So I think that in itself has become a challenge, which has been highlighted in a way through this adverse opinion. Okay, so that of course has to go in line with what is there in the main audit.
Sir, here MRGC para is also applicable.
Sorry?
Sir, MRGC para of report is also applicable.
So, see, MUGC para you will include when you don't want to modify. Remember? Remember? When do you include that para? When you don't want to modify. So when you are modifying, why will you include that para? Understood?
Okay, sir.
Yeah? Okay, next. CA Omkar, Statutory Auditor of Sabhyata Limited for financial year 23-24, and the company is engaged in manufacturing of floor tiles. During the audit, CA Omkar obtained certain audit evidence which were not consistent with the affirmation made in the financial statements. Discuss as to how the CA should deal with the situation in the auditors. Over to you. Over to you quickly.
See, here in this case, he is very clear that he has obtained that audit evidence which were not consistent with the affirmation which are made into the finances. But see, what is the meaning for the affirmation with this sentence, sir?
Let's suppose you got some evidence. Okay. As for the evidence, the recording should have been done, let's suppose, in a manner X. Financial statements show that as Y. So that is
Okay.
inconsistency. Okay, so that's the meaning.
Inconsistent that the presentation error mistake.
So it could be presentation, it could be recognition, it could be measurement, it could be disclosure. That is not given.
Okay. See, actually, when the audit evidence is obtained,
Right.
and there is a material here that received but not consistent, which
Yes.
means that if it is a material,
Hmm.
see, it could be leading to the amount or presentation or classification or disclosure.
Yes.
It anything if the matter is pertaining to that, if it is a material, if it is a uncorrected
Right.
misstatement, then
Right.
we are eligible to provide the qualified opinion.
Okay.
When there is a material and pervasiveness with respect to the
Yes.
uncorrected misstatement,
Yes.
when the sufficient appropriate audit evidence is received with respect to the amount, class, or presentation or disclosure,
Right.
then we can give the adverse opinion.
Okay.
In this case, the question is silent. We can
Yes.
choose either qualified opinion or the adverse opinion.
All right. Anyone else? Any more thoughts? See, this is a situation which you generally come across. Whenever there is any misstatement, yes.
Whether the audit evidence is appropriate, it itself is a question, because the audit evidence which the auditor has obtained is not in affirmation with the financial statements.
Correct. So that can also be one of the considerations you rightly mentioned.
Yes, sir, if the auditor is not able to obtain the sufficient appropriate audit evidence, then we have to give the disclaimer of opinion.
So you're saying that can also be one of the considerations.
Yes, yes, yes.
Okay, not always. Because disclaimer you will choose when it is pervasive. Yes or no?
Yes, correct. Yes.
Yeah, so of course that can also be one of the considerations. See, in the given case, it's quite clear that auditor has got something which is not appearing in the financial statements. So modification is a must, no doubt. As a first step, what should he do? As a first step, we should get on to the discussions with the management. Okay? Some of those procedures, etc., I'll have to perform. But over here, we don't need to get on to that. Okay, so even if you want to speak on that, maybe you can just discuss that briefly in the answer, because the question is very specific. It says, how do you deal with that in the auditor's report? Okay, so that's what the question is asking. So if the auditor has received the information, and that is not how the accounting has been done, so there are only two course of actions. What is that? Qualified or adverse. So that is something which the auditor will have to consider in this case as well, depending on, again, whether the impact is pervasive or not. Okay. Next. Neptune Limited is a company that holds significant investments in a portfolio of equity securities. Okay, so it's all about investments. Due to a decline in the market value, companies' investments have suffered notable diminution in value. For the financial year ended 31st March 23, audit report of Neptune Limited included a qualification regarding non-provision of 70 lakhs for the diminution in the value of these investments. As the auditor for financial year 23-24, now you are the auditor for next year. So there's a qualification in the audit report in 22-23. Now you are the auditor for 23-24. How would you report in the following situations? If the company doesn't make a provision for diminution in 23-24, and if the company provides for this in 23-24, over to you. In both the cases, how will you deal with this as the auditor? Quickly, over to you. See, in the given case, 22-23 is qualified. Okay, so this is qualified. Now you are the auditor for 23-24. So it appears earlier there was a different auditor. Now you are the auditor. Tell me quickly. What do you do?
Sir,
So in this, yes.
Sir, this is, see, in the, when SCA 710, comparative information and the comparative figures and the corresponding figures, and in the independent audit report, the financial report.
Right.
Yeah, it talks about, see, this is a very clear case. This is a existing prior period disqualification is given on the 2022-23. Right. Now, on the 23-24, if it is corrected and correctly provided or not,
right,
that we need to check it out first.
Okay.
If this is corrected and provided in the correct provisions, the rectification is done or not. If the rectification is not done, yes, then definitely we will provide the qualified opinion again. Okay. For the 23-24 as well. Correct. And if the perverseness is not clearly mentioned, if it is a significant, item, is a substantive items or not. Right. If it is a substantive item, definitely we will give the disclaimer, that adverse opinion also. So I don't think we need to get into the adverse opinion over here. Yeah. It's first of all limited to one item. Number one. Yeah. Number two, somewhere we understand qualification was given. Third, the way the question is creating situations. Okay. Yes, so sir. It appears as if the qualification is the right opinion which has been issued in the previous year. Because otherwise, in a way, we are saying that maybe in the previous year, it could have been adverse instead of qualified. Yes or no? Yes, sir. Yes, sir. It is again lead to a sort of possibility or an assumption. Yes, sir. Here it is, in this question, it is a clear evident that they have qualified opinion only given in the existing year. So
Right.
now the company does not make provision in the diminution in the current year, which means
Right.
definitely we have to provide that qualified opinion.
Correct.
If that is corrected, then we need not give the opinion. We can give the clean opinion.
Yes. So very simply, if the rectification is done, so you'll take out the qualification. If
Yes,
not
sir.
done, you'll continue with that,
Continue the existing qualification.
right? Yeah. All right.
Yes, sir.
Yes,
So
yes, sir.
let's
Clear,
look at
sir.
one more. Yes. During the course of audit of EC, CA Guru has a reason to believe that a fraud involving 75 lakhs has been committed in the company by its employees. Is CA Guru under statutory obligation to report the above matter to central government by filing the prescribed form on MCA portal? Further, so there are two questions. So this is, I think, question number A. Question number B, how should they report the above matter? Over to you.
Sir, it is not required to be reported to central government as per section 143(12) because the amount is less than rupees 1 crore.
Okay,
And the auditor has to report this matter in the Caro report under the clause 11.
right. Anything else?
Statutory obligation in the central government for filing prescribed form on the MCA. See, here the prescribed form is talk about in the ADT 4, sir. We will
Right.
file that ADT 4 as per the section 143(12) when
Right.
there is a fraud is exceeding 1 crore. But in this case, that amount is less than 75 crore, 75
Right.
lakhs. We need to communicate with those charged with the governance.
Right.
And within 2 days we need to inform whether the
Right.
report. Yeah, and also in the Caro report class 11 talks about where there is a fraud by or on the company,
Right.
then we have to notice and report it to that management inquiry.
Right.
It's very clear that, sir. And also we have there is a in the reporting that class 11 it talks about whistleblower complaint. Is there any whistleblower complaint? Is the mechanism also is there record that also we can check it out.
Yeah, of course. So I think some of the things which you have discussed is good because that is more about the audit procedure. But as far as the reporting requirements are concerned, so I think one is, of course, which the question is asking you, that is in respect of the filing of the form. Okay, whether you do this or not. So therein you will go by the legal provision straight away. Okay, depending on the criteria that you have, whether you file it or not. The other part, which I think the question talks about, which is in the respect of the audit report, so therein you need to assess the reporting
Yes.
implications, which of course will be there for Caro because the moment you have this fraud, so this Caro is one thing you'll always be looking at. Okay, again,
Yes, sir.
considering the amount involved, this will always be forming part of Caro. So as far as Caro is concerned, you will have this matter. I think somewhere over here, auditor will also have to give a consideration that as around this matter which is there, whether it should also form part of the main audit report or not. And how does it become part of the main audit report? In the form of modification. Yes or no? Why? Because somewhere if there is a misstatement which is there in the financial statements because of this fraud, that is something we'll have to, auditor will have to look at as to whether that has got rectified during the year or not. Because if that is something which is continuing to be misstated in the financial statements, so this can very much become a part of the main audit report as well, again depending on the materiality. Yeah, so this consideration has to be there. Okay, so when the question is asking about this, you should always be including your considerations in this case.
Yes,
Okay?
sir.
And of course, if there is a fraud involved, if the company has this matter, okay, wherein the fraud is committed by the employees, so somewhere it reflects on the internal controls of the company. Yes or no?
Yes, sir.
Internal controls have failed clearly. So if those have failed clearly, then you also need to assess whether the IFC is applicable on the company or not. So the reporting implications in the IFC, because the controls have failed, because of which the company could not detect this fraud and the employees could commit the fraud, should also be one of the reporting considerations. Okay, but there again, you'll have to just put it down in the form of your considerations, because you are not clear as to what is the main weakness, whether it's a significant or the material one. So that's how you need to go about it. Clear?
Yes, sir. Also, that our objectives of auditor is clearly stated about. We need to obtain the reasonable assurance, reasonable assurance that the free from the material misstatement, and also fraud is there or not. That also is there. So we have to be mention all these things.
Correct. So you are trying to say that when you obtain the reasonable assurance, you try to ensure that the financial statements are free from material misstatement. And those misstatements could either be because of unintentional mistakes or intentional mistakes, which is a fraud. Correct?
Yes, sir.
Yeah, good. So this is how you should be looking at it. Great. All right. So I think with this, we can just conclude our discussion. Any questions, any doubts that you may have, we can discuss that now. Over to you.
Sir, I think that since we studied the generally accepted the auditing standards and framework, and we studied all the auditing standard prior to this reporting, which really helped us to understand and respond to this reporting. Unless otherwise we studied about those things, we cannot be able to express our opinion here.
Of course, that's correct, and that is what is I would say a basic requirement on the part of any chartered accountant. Because if you look at audit is something which is the core, okay, with which you are supposed to be a specialist. Yes or no? So this clear-cut understanding on the part of a auditor or these requirements related to audit, these are something you can always expect from any chartered accountant, and it's good that you are getting clarity of some of these things. It's great, and this topic in particular, I'm again, of course, from examination perspective, this is going to be important, but practically also, this is very important area. And we discussed that this is the only deliverable which the auditor provides to the management of the company, and this is what the company waits for. Yeah. All right. So I think with this, we can just conclude our discussion now. Thanks everyone for your time and for this wonderful participation once again. Yes.
Okay, thank you, sir. I have one question on this.
Yes.
Sir,
yes, sure.
in audit report, why
Yes.
there is a separate section for management responsibility?
See, that is there because as an auditor, you are just trying to be very specific and clear. So if you remember the audit report that we looked at a lot of places, could you see that how clear and specific the auditor was when audit report is what? That is how he is communicating to the stakeholders. So the stakeholder should have absolute clarity as to what is required on the part of the auditor as well as the management. So that's why auditor is clarifying once again through his audit report that this is what was the responsibility of the management. So preparation of financial statement, you should not expect out of me. Management is expected to do that. They have done this. Internal controls, of course, I am there to review, but management is responsible to put that in place. Management is responsible to ensure their operating effectiveness. Okay, so that's how he's just trying to pass on this message once again in a clear manner to avoid any sort of confusion on the part of the stakeholders. So that's why it's included.
Yes, sir. Their responsibility is clearly mentioned on that part. Why
Yes.
I am thinking in my mind is because, see, with respect to that paragraph, responsibility with the management, they see we are the auditor only signing the report.
Yes.
My intention is that for the particular section referring to that management can also sign that for the responsibility they are taking it, right? Why their signature is not included for that particular section? That is my question.
Okay, so see, there are 2-3 documents which are exchanged between the auditor and the management. So let's try to understand. So this entire process, I think you need to look at. So first of all, what will happen? Management will reach out to you for your appointments. They will propose that we are looking to consider you. So you'll extend your sort of acceptance that I am happy to be appointed as the auditor. Then the management will appoint you. So once you are appointed, that means you already have a clarity as to what the management is required to do, what you are required to do. And particularly in respect of statutory audit, everybody is clear as to what, because it's arising out of the statute. But even after that is done, there's a document which is exchanged between these two parties. That is what you call as agreement, okay, which is technically called as engagement letter. In the engagement letter, everything is clarified. Scope is there, timeline, okay, what is going to be the opinion, objective, what are the responsibilities of management, what are the responsibilities of auditor. Each and everything is clearly laid out over there, and which is of course signed by both the parties. Why is that signed by both the parties? Because that is an agreement between these two. Okay, so now when it comes to the appointment letter is something which the management is issuing, so they will sign it. Engagement letter is a document of both, so both of them will sign it. Then comes to the financial statements. Now financial statement is signed by both because somewhere you need the identity of the document on which you are issuing the audit report. But when it comes to the audit report, now please understand that it's a report of the auditor. If you make the management sign on this document, even on that particular para or any other thing, so what does it become? You are in a way diluting that. So you are bringing in the management to say that some part of this report belongs to the management. Is that true? Answer is no. So there are a lot of things which are included therein which belongs to the management. So if you talk about the financial statements, which the auditor is referring to, that is also something which the management has prepared. So will you make the management sign on those particular sentences? Answer is no. Okay, so it's clearly agreed, discussed between both the parties. That's why auditor is including that para, that this is my understanding with the management, that this is what the management is responsible for, on the basis of what? On the basis of the engagement letter they have signed. Okay, and that's why he's not required to again make the management sign on that. Why? Because it's the document of the auditor. It's not the document of the management. Okay, so that's why it's not something on which you can make the management sign. Clear?
Yes, sir. Thanks for the explanation. Thank you.
Sure. All right. So then I think I can just pass it on to Karuna ma'am now.
Thank you, Achal. Thank you so much. Thanks for explaining in depth, like sharing in depth knowledge and clearing the doubts of the students. They are really like trying to learn the practical aspect, right? Good morning, students.
Good morning, ma'am.
How are you? Hope you are enjoying the session.
Yes, ma'am. With your blessing.
So today you have completed most important part, right? Which the auditor has to reporting part. And I think all of you are through with the concepts.
Yes, ma'am.
Yes.
So tell me, how many types of opinions are there which auditor expressed?
There are 4 types of opinion, ma'am.
Okay. Tell me in detail.
Ma'am, one is unmodified opinion, that is a clean report. Another one is qualified opinion. Another one is adverse opinion.
Modified, no? And subpart of modified opinion.
Which one, ma'am? Yeah.
Unmodified and then modified. And modified is again divided into 3 opinion. Yeah. Tell
Yes, ma'am. Yes, ma'am. But there is a two things, modified and unmodified. In the unmodified, it is a clean opinion. In the modified, there are 3 opinion. One is that qualified opinion, adverse opinion, disclaimer of opinion, ma'am.
Okay. And which essay deals with these modified opinion?
Modified opinions deals with when there is a material misstatement.
No, I'm asking which standard deals with essay.
Which, 705, ma'am.
Right. And
705, the modification to the opinion in the financial statement. That is a standard.
Right. So, and one more thing, like essay 706, which name indicates emphasis on matter paragraph and other matter paragraph. Anyone of you can tell the difference in the emphasis of meta paragraph and other meta paragraph?
Ma'am, emphasis of the paragraph means when in the financial statement that amount and the classification and presentation disclosure and everything including the disclosure is appropriately presented and disclosed. But where the auditor feels that to highlight in the audit report, he can bring into the emphasis matter paragraph.
Okay, can anyone else tell the emphasis of meta paragraph? Geeta, Sumit, or Ravi? Anyone else?
Emphasis of matter paragraph is related to the information which is already disclosed in the financial statements and which is related to the financial statements only. And in other matter paragraph, the other information which is other than the financial statements, which is not been disclosed.
Very right. One more important aspect. Emphasis of meta paragraph, when it is given, when it is very important to
Users understand.
Fundamental
To the users understand.
Users understanding, attention. Right. And if the auditor is not able to obtain the sufficient and appropriate audit evidence and the misstatement is pervasive, which kind of opinion, which opinion will be expressed?
Disclaimer of opinion, ma'am.
Disclaimer of opinion. And if he has got the sufficient and appropriate audit evidence, then?
Qualified opinion.
Why? It is pervasive also.
If pervasive, then adverse.
If it is pervasive, then it is an adverse opinion, ma'am.
Yeah.
If it is not pervasive, then it is a qualified opinion.
Then it will be qualified opinion, right? So we need to see whether sufficient and appropriate audit evidence are obtained or not obtained. Correct?
Yes, ma'am.
And if it is obtained, then we will check materiality and pervasiveness. Material misstatement and pervasiveness.
Yes,
and if it is not material, not pervasive, then what kind of opinion will be expressed?
Then it is a clean report, ma'am.
It is clean report. It is unmodified opinion.
Unmodified, yes.
But yeah, any of the factor, depending on the materiality or pervasiveness, the opinion will be modified, right?
Yes, ma'am.
And on one of the matter, I want to give emphasis of matter paragraph. Whether I can give qualified or adverse opinion?
No, ma'am.
No. So I think we all are going in correct direction. And can you just tell me how many standards are about reporting? Means SA700 series deals with the reporting part, right? Which we have covered today. So how many standards are being covered today?
6 standards.
Totally, there are six standards, ma'am.
So 700 tells you about the whole structure of the audit report and implications regarding audit report. And what is 701?
It's a communicating CAM, ma'am, key auditor matter in the independent auditor report.
Okay, so any one of you can tell me what is the difference between emphasis of matter paragraph and key audit matter? Because both are very important. Both are.
Ma'am, actually CAM is that key auditor matter when the auditor feels that there's a utmost significant matters and he wanted to bring into the notice of the recipient of the report to understand the reason, then those items should have been discussed with those charged with governance as well.
Very right.
And also
you have studied very well, very good. And Geeta, would you like to add on something?
No, ma'am, no.
Ravi?
I have not revised.
At least tell Geeta which standard deal with the key audit matter and which standard deal with the emphasis of matter paragraph.
It's 701 for key audit matters.
Right. And 706 for emphasis of matter paragraph, right?
Yes, ma'am.
Yeah.
Yes.
Ravi, can you give one example of other matter paragraph?
Pending of litigation.
Pardon?
Pending of litigation or pending of litigation.
Other matter paragraph. Beta, other matter paragraph is not related to financial statement. Other matter paragraph when we want to highlight which is not covered in financial statement.
Ma'am, which is not covered in the financial statement. Say example, if the standalone audit is done by the principal audit, their component is audited by the different auditor.
Yeah.
Then
And
that
we
case
want to inform the
user the stakeholder that it can put the other matter of that the branch or division is audited by the branch auditor.
Very right, very right.
And also in case of consolidated financial statement also the same will happen, because it will have the many subsidiary and associate joint venture also will be there, that is called component for that case. The same thing will applicable to the other matter paragraph. We will incorporate the situation.
Right. So very nicely explained. So I request all of the students to please read thoroughly so that when your conceptual knowledge will be clear, in the examination you will be able to write the correct provisions and explanation, and you'll be able to interlink it with the same, like the situation which is being asked in the question, and you will be able to write correct conclusion. I also request you all to practice drafting of opinion paragraph. It's very simple. If you will practice the drafting of opinion paragraph, like what will be the different terminology used when we express adverse opinion or when we express qualified opinion, right? So if you practice that also, it means your this topic is very strong and you all are aware that this is very crucial and important role of auditor. And in the examination also, this chapter plays very important role. So please revise and prepare your notes. And as already we promised you, on the 17th, when we'll be through with all the engagement and quality control standards and whole course will be completed, we'll be having quiz, right? So be prepared for the same. Okay.
Yes, ma'am.
Okay,
So any other doubt or any other query which you want me to address?
Ma'am, how to remember all? It's very complicated to remember.
So this is what we tell you every time, that when you are studying the chapter or when you are studying the standard, please make important pointers, note that what is important points, and practice questions just like we did in the LVRC. In 3 hours, we have just practiced question, and with the help of question, we understood the concept. So if you are through with the concept, you can practice with the help of questions. Do writing practice. When you will be having writing practice now, some of the questions will be you will be able to retain the important concepts also. Secondly, multiple revision are very, very important. If you are like in standard, if you have started with SQC1, you have covered SQC1 today, take SA 220 tomorrow. But when you start SA 220, please revise the SQC1 next day also. When you are starting SA 220, prior to that, you just complete SQC1. So multiple revisions are very important. What you have studied today, it should be revised tomorrow and day after tomorrow, so that you can, if you are able to retain in your mind, and in the examination when you are revising in those 2 days, you will be able to revise the same very quickly. Because what happens, what we have studied today, if we refer that material or that chapter after 15 days or 10 days, we are not able to retain as much as we have studied today. So we need to pressurize our brain. हमें उसको पढ़ने में फिर से time लग जाता है. ठीक है? If you have studied today, you will revise tomorrow. It will take, maybe today you have studied in 2 hours duration. And when you will be revising tomorrow, it will take half of the time. At least half of the time will be changed. So you'll be able to revise it in 1 hour or maybe in 40 minutes. But on the very next day when you'll be revising it, it will be done in 20 to 25 minutes. But trust me, when after 15 days or 1 month's duration also, you will be referring that material, you will be able to recall faster. It will not take much time and you will be able to retain in much more detail. And in the examination, when you will be revising in during those 2 days, you will be able to write a corrected, because multiple revision is very important. Student did one kind of mistake that today we have covered whole time, but after 15 days or 1 month or 25 days. Then again we need to devote more time. So this will save the time, and it will be like it will be like you will be able to remember faster if you apply multiple revisions simultaneously. Right, Geeta? And please mark those questions which cover like not only one standard, more than one standard, or in those questions where you find difficulty. Mark those questions so that you can revise before the exam.
Yes, ma'am. Thank you, ma'am. Giving so
Thank
much
you,
time
students.
to us.
Thank you, everyone. Any other query if you want to ask?
Thank you, ma'am. Thank you so much.
Thank you to all of you, and thank you to Achal sir for sharing his vast experience and knowledge with all of you, with the practical examples and questions being asked in the examination, previous examination or mock test or revisionary test paper in questions, like our study material questions, so that you are able to through with all the important concepts, and this will help you in your passing journey. So with this, thank you everyone. Thank you to the technical team. Thank you
Yes,
all the
ma'am.
students. Hope you all are practicing and will be passed with flying colors. With this, wish you all the very best. Thank you,
Thank you.
everyone.
Thank you, ma'am.
Thank
And
you.
one more thing, ma'am. Today, Axel sir is shown to us that various kind of reporting, that disclaimer of opinion, adverse opinion, qualified opinion, clean opinion. He opened the real life reporting in
Yes.
the various companies, and he explained in details for each example how the opinion paragraph is given, how is the basis of opinion paragraph is given. He explained in details. Lovely, ma'am. Thank you so much for that.
So that is the reason I said now he is having vast experience, vast knowledge of the concepts, and he can tell you with the help of practical situations.
Yes, ma'am.
And this will
Yes.
really help us.
Yes.
So with this, thank you. Thank you, everyone.
Thank you, ma'am.
Thank you.
Thank you.